Alrighty. Good morning. I'm going to go ahead and wait for others to get in here before I go ahead and get fully started. Alright, so let's give it just a minute. And I'm going to make sure that we are working on YouTube as well right now. So make sure our stream is live. It does show live. Alrighty. We're rocking and rolling. Now, how do I see? I think I closed my little YouTube studio mode, maybe? Nope. Whatever. We'll figure it out. Let me see if I go back to YouTube. All right, we got some stuff going on in the market today. We can't expect every day to be a super green day. We can't do that, but we can make sure we watch and make sure we don't lose support in the moves that are being made. But everything was, for the most part, due for some sort of a pullback. Others aren't going to have that pullback today because they were already in the downturn, but there is still a little bit more upside, it looks like, on a few more positions overall. All right. Hold on. I'm trying to mute my thing. There it is. Alrighty. I have the Discord up. And let's see, is everyone in here? I did a super long video last night going over the indicator and everything just to prepare for kind of today. And my throat was given out last night. So it was still just getting over the sickness and everything. All right. I'm going to put the link right back into the Discord. Make sure everyone is good to go. Alrighty. Show the store page. People want to know Fibonacci's, right? So let me go ahead and pull my, I think I have a Fibonacci cheat sheet. I thought, oh, there it is, Elliott waves. And then wheel strategy, we already have our sheet up. So I think we're good. We'll wait till we get everyone in. You can say hi in the chat. You can say hi in Discord. Put questions wherever is convenient to you guys. Alrighty. But we have a little bit of a mixed bag this morning. Take a look here. ASTS with a terrible, I mean, somebody put out a price target by a bank of like 40 something. Yes, the stock has done that a couple times, but I don't think they're looking at what the future holds. ONDS, got a trend line to retest. ASST should probably be pretty good in the morning. Because it didn't do afternight trading, and all the good news and bullish news on crypto came out last night. Bitcoin's doing their retest. Keeping a close eye on it because I know the things can turn really quick for BBAI, so it just moves super crazy. Alrighty. I don't want to get started, but I'll give them a few more minutes. Thanks for being here. So we had a few bots go off yesterday. So what I do is if we go through our stock bots from last night, DDOG was one of the ones that I knew. So we have on the moving average a nice green diamond here on the trend line, which is awesome. Trend line and the moving average, sorry. So technically you have more support down here. But if we go ahead and draw our Fibonacci extension, because we can see this is the bottom before the big move, and here's the furthest point of the pullback. So now I can go ahead and draw where our targets would be. Grab the bottom, grab the top, and grab the pullback. Okay, move it out so you can see targets. Sure enough, we get some targets right here in this trend line. These are where the main targets hit. This is where you're going to find the first kind of bit of resistance, which is going to line up fairly well with your previous top, just because of how deep that pullback was. Then this is kind of the main target area where we see a lot of profit taking, and then this is like hitting the main target of like you're going to want to get out for the most part. Could we squeeze? Absolutely. And we have our squeeze targets. Okay. And then typically after, if we can get there and we pull back, we bounce off of that, there is this target. Okay. So that's how you kind of spot your squeeze and extremes out of there. But I liked this chart, the way it looked. So we just want to keep a close eye on it. Another one I think was, where is it? LAMR. This has a lot of bullish formations, and I already charted them, but if you took away, this looks like a cup and handle to me. Cup, here's your handle, going down to the most recent Fibonacci level. We get a little yellow diamond here, and then you also have this ascending triangle, which typically bounce, and bounces up to here. And then we have our targets based off of this move right there, okay? So this one looked good to me as well. Let's see here. We can go through a few other ones. We had bearish stuff. So we had Jazz, which was bearish. Jazz Pharmaceuticals, sure enough. Yeah, you had a diamond there on that red day. And then you got another opportunity here. We're losing that trend line. So, yep, you would have gone ahead at close and just exited your position, or you could do it at open the following day to see if you get a bounce, because these diamonds will come in on the red days, okay? Because momentum shifted. They're not going to give it to you on the up day because there's still upward momentum, but on the down day they will give you the diamond. Our back testing does make the transaction at open the next day, because typically you'll see this big red day and then at open you'll probably get a slight bounce because it was so red. Buyers come in slightly and it's a little higher than where it closed. So that's how back testing has ran the pricing. We must have had some macro data come out. Let's go take a look real quick on here. I want to make sure nobody is in. No, it doesn't look like it. Did we have our macro data come out? It looks like it based on the market. Chevron Quantum Partnership. Let's see here. Uh, do, 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 do. I'm just trying to see if there's anything. Private payrolls rose 41,000 in December, coming up short. So slight payroll. But other than that, it just looks like it's just the market breathing for a second. Yeah. Maybe not from. We were expecting 49 private jobs. We got 41,000 jobs. We know the job market data has not been great. That's been the main reason right now for even though we have our growth and everything going well, our unemployment is doing bad. So they still feel they should probably be cutting rates a little bit more. Can't join. Oh, that could be why people aren't in there. You can't join, huh? Well, let me go ahead and grab the new link. I don't know why that didn't work. If event details. That would make sense. Edit event. Next. Alrighty, there we go. Let's see if that worked. There we go. Alrighty. Trying to see if anyone else is coming because everyone wanted to do it today, but I don't see anyone. I mean, I see, I'm assuming Miguel's in here. Let's see here. Alrighty. I want to get started because obviously the market's going to get open. We're not going to really get as much of an opportunity to talk immediately. Yeah, there we go. Alrighty, we got 3 in here watching. Wanted to get a little more, but I don't think we're going to wait much longer, giving them 10 minutes from our start time we put out last night. So I kind of want to go ahead and hop into it. It's going to be recorded, so if people want to watch, they can go ahead and watch. Like I said, we're going to have some red coming in. It's expected, guys. We've been running for the past since Friday, like a freight train. Like a lot of things need to back test. Here's BBAI needs to back test. Here's ASTS. If you go to the smaller time frame, this needs to back test. You could trim if you wanted to on this back test to 80s. Yeah, it's quite a bit of a drop, but compared to what this thing what it moves, I don't think it's that big of a drop. Yeah, 16%. I'm used to this thing dropping, doing its normal, there, 26%. Which could it do it again if it can't hold this one? Yes, but I think we're going to get something like this time where it came down, retested, and bounced higher. So I think that's going to happen, and then we're going to get into this low 100 again as we're approaching earnings. So that's kind of what I'm thinking with ASTS. It's a company I truly want to hold and everything, so I'm not going to let it go just to let it go. I want to make sure I get to these overvalued areas. But first thing I wanted to hop onto was the indicator as a whole. All right. So we're going to go ahead and go over what the indicator is and how it works first, and then we're going to circle back into the wheel strategy and circle back into Fibonacci's and how that all works. Okay. So for the first thing we're going to go over is the indicator. As you guys know, we have the indicator. It is on here on our WAP. 50% off for life with the limited spots. Anyone who's getting it at the $19.99, there's a limited amount of spots. That will be your price, grandfathered in. So just know that. If you haven't signed up for your affiliate program, go ahead and do that. When you go to our store page at the very bottom, it's right here, and it'll say become an affiliate. You can go ahead and become an affiliate. You'll go ahead on your main page here. When you go on the desktop version, it's this little tab right here. It says affiliates. Okay. And what this is going to do is going to take you to the affiliate store page. You can go to affiliate marketplace right here. Okay. Type in chill, and then it'll say become an affiliate, and then you'll view your assets. You have a link. This is your custom link right here that you can copy to send people. So when you send them that link, as long as they sign up within 30 days, you will get credit for it, and every month they are signed up, you will be paid. Okay. So that's how that works. Just have a copy of it, put it into your bios of anything on X, on your Discord profile, whatever it is, so you can quickly share it, or you can just have people click on you and they just see it and they go. So that's how that works. That's just like the quick get around. But just know limited amount of spots. Make sure any of your friends or anything want to get in and lock in that price and just have it for life. It's way cheaper than I think anything else out there by far. And so now we're going to go over what and how it works. Okay. If we take a look on our trading view, here is how I like to simplify things. Okay. I'm going to open up the indicator and I'm going to put the legend on there. Okay. Show the legend. I like the bull bar. I do have it. It's already on there. I got to fix the code. But this is how I like to see mine. And basically the simplest way of putting it is the candles are telling you what to do. Okay. So for example, the orange is the trim zone. So when I get a diamond to confirm what I should do, then I do it. Okay. So we got a red diamond on an orange in the trim zone. That means trim. Okay. Here's a neutral zone candle. Great. Neutral. What do? I just remain neutral. Okay. Same thing. Neutral zone candle. Neutral zone candle. What do? Just remain neutral. Okay. Here is a yellow zone with a diamond. Okay. What does a yellow zone mean? It looks like we're going to be adding in this zone. Okay. Do you have to follow that? Do you want to buy more? Do you want to trim more, sell more? Yeah, you can go ahead and do what you want with your portions. But what the color coding is telling you is the company is overvalued, but it's not so overvalued we've made it to the sell zone. This is all trimming zones along this way. Okay. Dark or bright green is a buy zone, so just go ahead and buy whatever your buy portion is. And then light green is you're entering a buy zone, but you're not like super undervalued where it's like a no-brainer kind of add and buy, but you are, I would say, starting to become undervalued, so it's still an opportunity to do something. And it's up to you whether or not you're doing a cash secured put, adding shares, or whatever your action may be. That is up to you on that one. But it's telling you you're there. You're not in neutral. You're still undervalued more than you are in neutral zone. But the candles are telling you the action to take. The diamonds are telling you when to take them. Okay. That's how that works. It's just confirmation to make that move. Here, it's not going to time the top because momentum needs to shift to the downside in order to get the diamond. Okay, so if you're worried as we're hitting this like resistance line, just like we kind of did here, we're hitting a little bit of a resistance, like on this one, we're hitting resistance and we hit it twice here. It was finally time to break through that. But that's how that works. The candles are telling you what to do. The diamonds are confirming the action should take place. That's the easiest way for me to explain that. Okay. We have a few rules. I like to trade companies that are above the bull line. This would be our custom moving average. As you can see, I wouldn't have been buying it here. Obviously nothing here. Okay. Now we can start looking at the stock. Okay. Still looking. And I make sure, when do I stop looking at the daily? It's when the high of a candle is below the moving average. Okay, so I don't care if it's just the body's under it. I want the high of the candle to be under it. And that's when I stop looking at the daily. Look at it, almost got there on this one. Right? But the high of that candle's still there. And then definitely when we got the diamond, it was there. Okay, so but there are some times where it will go under it as a full, and what will I do? I will switch to the weekly time frame just to get a bigger picture. Even monthly, you can view the monthly time frame and see what that's kind of looking like. Now you guys have a few other indicators on here. You have the automatic trend lines, which have been a huge saver in time and charting. But you can remove those if you wanted to. You can remove the trend lines. And if you don't like the light dashed ones, those are historical trend lines, the one previous to the one that is currently being used, which I like because even the trend lines that are previously on the chart still act as a resistance and support. So I know if I lose this trend line, the downside to the next trend line isn't much. So just know that you would be comfortable potentially adding, knowing that you could get out if you lost this trend line and you got the moving average there. But previous trend lines help me understand where there's still resistance and support staying. So, but if you don't like them, go ahead and remove them. Now, you do have Bollinger Bands pre-built in here. But first, I want to go over the buy, add, trim, sell labels, okay? They act very similar to the candle coloring, okay? So basically what this means is the company hit a value. These labels are based on the company's valuation, okay? And what it means is the second this is running up, we've finally hit on this candle right here, okay? We hit a typical trimming zone or trimming valuation of a company. Okay, that is typically where trimming will take place. Okay, but what are we waiting on? We're waiting on the diamond to confirm that we are done going to the upside. Okay, same thing here. We hit a trim. We got a couple more days. This was the next trim value. There's 3 trim values and there's 3 different sell values. And then sure enough, diamond confirmed the next day. We went down. We hit the trim zone again as far as the value of the company, and then we had another diamond down. Okay, so the labels help you know that you have hit the specific zone, whether or not it's add, which is typically where some buyers like to step in, Okay, buyers like to step in. It's typically where buyers like to step in for add. When you get a buy label, which doesn't happen often when you're kind of above the 200-day moving average, but it does happen. That just means you're now typically where another set of buyers like to come into play. So now we're looking for another diamond confirmation to say that the momentum has flipped. Okay, so same thing, add, diamond confirmation, flip, trim, diamond confirmation, down. Okay, but it's only going to be these add, which is typically in the yellow zone, and your buys, which will be in these green zones. Trims will be taking place in the orange zones. So these light green and red are typically going to be the more like it's undervalued, not too undervalued, still can play the game. If you see other things that are acting like support here, right, then you can play the game. If you saw that support was here and a diamond and a light green, you might think, I should probably do a cash secured put because the downside is still potentially here since there is no support yet. I'll give you an example. These are a bunch of neutral zone diamonds right here. Neutral zone, don't do anything. 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 Again, another neutral zone, don't do anything. Okay. I usually don't play the neutral zone game. Okay. Unless I'm in a position where I need to better my portfolio, get to cash. I have too much cash. I should just go ahead and start dabbling a little bit. I feel like we're, stuff like that. That's the neutral zone. That's like an opinion now. But I want to give you the opportunity to say, hey, there is a little momentum coming up in this area. Okay. And then same thing this way. Now, here's an example. Let me see if there's a better example. Rocket Lab have one. Here's a lot of trims. You can see trim, confirmation, go higher, trim, confirmation, add, confirmation. See that? So I'm trying to see a light pink, early days again. I'm trying to look for a perfect example here of where a light pink went further. Here you go. Here's your light pink, or sorry, light green with a yellow diamond. This is a neutral diamond. Don't need that. Don't need that one. This is a light pink or light green. I'm for some reason colorblind this morning, with a diamond on it. What would I do? Okay, well, I see the trend line and the moving average is significantly further down, right? You can see that. This is why it's so great that it auto charts these trend lines. Even if this trend line was here, you still had, let me grab the measuring tool. Okay, from the bottom down to that trend line, you still had a chance at a 15% drop. Okay, I don't love those drops. And if you're going back to this now new trend line, that would be a even bigger drop that it could have had, a nice 36% drop. I don't love that. I don't love the green line. It wasn't on a good support. If this was light green, just like ASTS was on our moving average or a trend line, that'd be different. I'd be interested because I see a bunch of support and I see momentum is coming into play. But up here, there's nothing besides this like straight line support, but it clearly has been trying to break down. So I just don't love it. But this would have been a very small position if you did do it, or did a cash secured put, which we will go over, and you'll understand why we do a cash secured put here. Because we would say we actually wanted to buy it for somewhere down here. Okay, so that's what the labels mean. Okay, that is what neutral zones and the colors mean, and it's all right here. We will have the ebook coming out, so you guys will know exactly, specifically the strategy on it and how I do it. But let me go ahead and remove those labels, because to me, the zones tell me exactly what I need to know. But some people do enjoy the labels, so I've left them there. Okay, Bollinger Bands. Bollinger Bands are what help us run the wheel strategy. You can take it as a rubber band, okay? Meaning it touches it and it likes to bounce off, okay? Now, when we get these breakout moments here, okay, yes, it can run, it can squeeze, okay? Now, do I think it's going to squeeze as much on this one? No. Why? Bollinger Bands like to get really tight when there's a squeeze happening. So you can see how they got really wide here, right? Really wide. And then slowly as time and it consolidated, the bands got really tight, or tighter, 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 tighter. And then we broke out. That's because a squeeze was happening. Okay. Same thing here. Big spread, squeezing, 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 and break out to the top. Okay. Same thing, consolidating, consolidating, break out to the top. We didn't have too much of a consolidation here, so they're pretty spread, so I don't think a squeeze is coming into play like this was a squeeze. But we still have the upside there. Let's see here. But yeah, it acts like a rubber band. As you can see, touched it, bounced, touched this middle line as support, bounce, touch that, bounce, bounce. Okay, so they're just rubber bands. I can go back to pretty much any stock and show you. Came up, bounced, 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 bounce, 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 breakout. Down, found support, bounce, hit the Bollinger Band, bounce. Okay, I hope you get the point that it's a rubber band. Treat it like a rubber band. So this is what we use. This tool is the only tool you could add if you wanted to an RSI, but you can basically just understand that when you are in an add zone or buy zone and you get a diamond confirmation or something, at the bottom half of the band, you would do a cash secured put. If you have at the top of the band, you would do, top of the band, and you start getting into this sell zone, trim zones, you could start doing covered calls. Okay. So the wheel strategy works perfectly with the indicator as well. It's not just buys and sells. If you mix in covered calls and cash secured puts during those uncertain times, you'll be much more profitable. And what do I mean by that? Covered call. I'm going to do like the simple terms. Actually, let's finish the indicator. But Bollinger Band, it's a rubber band. I put it on there because if people have the free trading view, they couldn't use a Bollinger Band and use our two indicators at the same time. So I went ahead and just added the Bollinger Band so that way you don't have to pay for trading view. Okay. I want to go over this one here. And there should be an update coming out here shortly with the divergence labels. Okay. Let me see here. Do I have divergence labels? Where'd they go? They're not popping up anymore? They were there yesterday on all my stuff. Hold on. Interesting. They're there. All right. Well, as of right now, they're not there, which is weird. Okay, we'll just carry on. Well, there will be divergence labels, and I'm sure you'll see them in the charts and everything, but it will tell you when there is momentum divergence happening. I'm really bummed that it's not showing you guys those divergence labels. Maybe I need to just re-add it. This one. Nope, not that one. Sorry. There it is. Nope. Show momentum. I have so many different versions that I've been trying to keep track of everything. Is this it? MACD lines? No. All right, I'll figure it out. But we do have one that will have divergences, which I wish I could show you guys here, so that way the video would be complete. But so how this is going to work, all right? So the pink or the purple line with the orange line, or however, if you can't, you can change the colors in the settings. It is a MACD. Overall, what is a MACD? It is the overall trend and momentum. The thing is with a MACD, it tends to lag, okay? So I wanted to overlay that so you can see the lag and slowly see what the overall trend is looking like. You can overall see right here that the trend is down, okay? Right here, right? We can see this better than we can see momentum, which momentum kind of fluctuates constantly. So I just want to see what the overall momentum looks like by using the MACD. MACD, when it's at the top, is typically times you want to be selling. At the bottom, typically times you want to be buying. Now, our MACD, or our momentum oscillator here, is going to be showing you momentum. You can see here, okay, this is showing you we're stair-stepping up. Momentum is going down right here. We're stair-stepping down. Sure enough, here's momentum. It's going down. And it looks like we're going to flip. So what the goal is, and what we have the divergence to show us, is when this momentum is either going opposite of the price. So if the stock is going down, but momentum is trending up, that is a bullish divergence, and we should see the price flip, okay? I really wish it was working this morning. I don't know. It was working last night during all the photos and everything, which is so weird. Let's see here, ASTS. But these are also when diamonds should populate, okay? Boom, boom. So they pair with the diamonds, okay? Here, that one didn't trigger, but the diamond did trigger, okay? So they should pair with the diamonds, all right? And basically how this is just working is you're following the momentum. So let's go to another one that had some pretty bullish momentum that we're seeing here flipping, and Archer. So you can see here, momentum down, and we had a flip. Sure enough, same thing during these diamonds, you can see. And you can draw trend lines on your diamonds as well. If you go here and draw a trend line, take a look here. If you grab this and go all the way down, right, here's a divergence. Momentum is shifting up. Do you see this? And the indicator is going to tell you automatically what's happening. And it will just show like a green label. When you see a green label, that just means the bullish divergence. If you see a red label down below, it'll be a bearish divergence, meaning that the momentum is going down even if the price is going up. So, but you can see momentum is shifting to the upside, yet during that whole time, the stock had been dropping, okay? And we finally get some diamonds in the add and buy zones, and we see a flip and rotation, and we see a buy or a break of the trend line. If you switch to the weekly time frame, you're going to go ahead and get that green diamond. Green diamonds do not populate very often. Every time, here's a 64%, here's a 300%, and to the trend line, we have another 96% to run, okay? So this is how the oscillator is going to be the momentum. MACD is going to be the overall. So you can see right here at the flip of this with your diamond happened nearly the same day. It's been going down. So the MACD was going down while this was going up, and that would create a divergence, right? They're doing the opposite. We have ASTS. Looks like on the 2-hour time frame coming back to test this trend line here. So we have a 2-hour trim, but light pink I'm not too worried about. I want the bigger gains. So I'm going to go ahead and wait and play this out. Looks like we're just going to get a nice stair step here. Hold this trend line, and we still have to the upside about 120. Okay. So a lot of things are doing that moment right now. They've had a lot of breakouts with it running so much, so I'd expect some sort of red day this week. Today is a better day than ever, I guess. So that is the indicator. Okay. The candle color is the action. The diamond is the confirmation to do it. Okay. That is how that works. If you want a better view of how close things are getting to flipping around, so you can see when a diamond is about to come into play, right? You can see your momentum is about to flip. You have the MACD that is starting to curl at the bottom, right? And now you can go ahead and make an entry. That's what we're looking for. Okay. I'm curious on a few others, but do you guys have any questions in the chat here before we dive deeper into the wheel strategy of some sort? Nope. Alrighty. So what is the, actually, we're going to switch around. Sorry, when I'm looking over here, I'm looking at the chat. Let's switch to Fibonacci levels because that's easier and quicker. Wheel strategy will take some time. Okay. So overall, Fibonacci levels, how does it work? There's a few tools, and the only tools I use is the fib retracement and trend-based fib extension. Okay. Fib retracement, think about this, is you're going to grab the bottom of a move to the top of a move. Okay. That's pretty much it. So here is a bottom of a move to the top of a move. Okay. And there are some targets and waves or Fibonacci levels that act as support because we're looking for the retracement level. So where's it going to fall back? So once I got confirmation to go ahead and sell, I can go ahead and draw these points, the low point before the move. So right here, right? And I can go to the top point. Sure enough, here is our support levels. So these are our bearish support levels, just because they're going to be the furthest ones that could potentially pull back to without losing structure. If it pulls back further than your 0 point, the very bottom point, structure is lost, and the Fibonacci levels are no longer valid. Okay, but the traditional pullback levels are these: the 0.382, the 0.5, the 0.618, which this is the golden Fibonacci. So really, I like to do it this way where that one is golden. So that way I know that is the goal is the price to get there and get some diamond. If we get a little lower, just make sure there's some extra support around there. But those are where the bullish or bearish zones to add are. But it's not overall bearish. It just means that since this moment, it's become pretty bearish to get down there. But if we take a look here, we find a good support at the 786 one and bounce up. Sure enough, we come up here, bounce right off the golden Fibonacci, go up, bounce right off the 0.5 Fibonacci. All right, and where's this one going to bounce off of? Well, what we can do is we can draw our new base. Okay, grab the bottom here, grab the top here. Okay, there's another level it can bounce off of, which is this 0.236, but it's a very small pullback, which is right here. Okay, 86. Okay, and then here's your, this isn't the, I wouldn't say I use this very often to figure out to find out a pullback, but it is a pullback level, just a very small pullback level that they don't really generate opportunities, therefore I don't really look for them to get into the stock. But if you wanted to know, like when this diamond populated where the pullback was going, same thing, just grab the bottom before the move, grab the top of this move, and sure enough, where did it bounce off of? Our golden Fibonacci. Okay, that's what we're looking for. We're looking for golden Fibonacci bounces, preferably in our add or buy zones with diamond confirmations. Okay, does that make sense? The Fibonacci retracement. Okay, if you need the settings, they are going to be right here if you want to keep, and again, you draw it from the bottom to the top. Okay, I just drew that wrong. So here's the settings. I don't do a trend line right there, the bottom to the top. I don't look to see that. Here are those main levels. You don't need to really use that one, but if you want to have it saved so you can check it, that's up to you. I remove the background. I don't want backgrounds on it. Remove the reverse, and then move the text and everything to the right side. All right. Those are the settings I have for that. You can, the video live stream will be recorded so you can watch back. So you guys can do that on your charts. But grab the bottom of the move to the top of the move. All right. All right. So now we want to know, where are we going? Where's our targets? Okay. So it all stems right back to this one right here. Boom. Okay. So the same way you grab the bottom of the move to the top of the move, to find where the target is, you now need to do bottom to the top at the same points you did the retracement points. Okay. Then you need to do to the very lowest pullback. Okay. For example, okay, we did this, right? Bottom to the top to find our retracement levels. See, it bounced off the 0.5, came up. It did bounce off the 0.6, came up, bounce back, now off this one. That's what I mean by those are all support levels. We're looking for those support levels, but we want to wait for the diamond to come into play at a support level we like, okay? So if we take these away, I'm just going to take all of them except the ones it bounced off of. So we do the bottom to the top to find the retracement. Now we want to find the extension. All we're going to do is we're going to grab the bottom. We're going to go to the top, just like you did before. And now the furthest pullback point before the full reversal happened, right? So you grab this low point right here. There we go. There's our targets. Now that this trend has pulled back and we have started the new wave, you can see where our targets are going. 116 looks to be our first target. If we can break through this resistance, we got 131, 141 to 157. Okay, these are going to be your next resistance levels and targets where you should start seeing some resistance. The same way we saw support on those levels, you're now going to see resistance on these levels. That is how you find your targets. Okay. Can things happen in between getting there? Absolutely. It's not always going to be a straight shot to there. There's going to be some bumps in the waves and everything. But if you extend it, there's timelines. Now, look, if we get to February 26, 130 comes into play without having to break the resistance. So could we hit this and boom, 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 and then come back up and hit these? Absolutely. Or 140. So that's how you find the targets. You just keep drawing it out, extending. Fibonacci is the second, like if you were drawing this extension here, you just do it once a day. Okay. So for example, if we thought that was the furthest pullback, this one right here, and we were going to bounce right off of it, there's our target. Okay. But then all of a sudden each day started going further down. The second the retracement goes further down, right, you always draw the furthest retracement. So now if it went to the 0.618 fib, that's our target. Now it came down here. Now that's our target. Okay. You can just slowly move it each day if it's going lower to understand where each thing are. If the stock goes up, you just keep moving up, right, your retracement levels. So it's really easy to pretty much plot the top and the bottom and slowly move along with the chart. Okay. So that's Fibonacci's. If you want to know the settings on there, these are typically the targets. The green ones are squeeze targets, where a company could definitely squeeze to during a high momentum, event happening. But again, don't use the trend line. Here's your 1, 2, 3, 6, 1. So these are your levels. I have the green for the squeeze. I have the white for the traditional targets that we find resistance at. And just so you guys can see that it's not a bunch of baloney here, I want to go ahead and I will show you that based on this to the top to the bottom, we're going to get this target. Okay. So grab. There's your targets. Boom. 1618 fib. That is before a squeeze event could potentially happen. So if you just drew this and saw that was your pullback, you would have known, okay, we're in the zone. Let's wait for a diamond. Then you go ahead and make your move. Okay. Does that make sense? Any questions? Looking over at the chat. Now that if you don't have any questions, I'm going to move over to our wheel strategy. There are some notes you might want to take. I have some key things as far as like rules to follow when doing this. Again, you're going to need the Bollinger Band, so make sure you have our Bollinger Band on. Okay, and I'm going to go ahead and increase the lines in style just because so you guys can see it better in the video. So I'm going to just go ahead and increase these real quick. And I might like to make them white just so that they're easy to see. Okay, top of the Bollinger Bands, we're finding resistance, right? So right now on what, all right, let's start over. Definitions. Let's go with definitions. Covered call. Okay, covered call is you own shares. For example, ASTS, you own 100 shares. Well, on a green day, like yesterday, you hit the top of a band, you could have set a covered call saying, you know, it was at, let's just say it was at 95. I could have set a covered call saying, I will sell my shares for $100 on January 16th. Okay. If the stock doesn't get to or stay above $100 on January 16th, I don't have to sell my shares. If it is below, if it's below the 100, you don't have to sell your shares. If it was above the strike, this price I said, I would have to sell my shares for the price. Okay. In return for this contract that I am signing my shares away to, the person on the other end is paying me insurance. Okay. What does that mean? Well, you guys have bought in some call options or leaps or something, right, along the way. The person selling a covered call is the person with that leap or with that is selling to that person with a leap. Okay. So the goal is basically when you get to a point where there's a little bit of resistance, you don't really want to sell, but you would sell close to that price, you can go ahead and set covered calls. Because I don't really want to let go of ASTS, but I still want to make some money. So what we can do is do a covered call. Okay, and I'm just doing kind of like a rough go around right now, and then we're going to dive in deeper. But for example, here's ASTS on TradingView or on Robinhood. So if I want to do a covered call, today's a bad day, it's a red day. Covered calls happen on green days at the top of the band. Okay, top of the band, green days, you do covered calls. Bottom band, red day, we do cash secured puts. Okay. Why? The premiums are juicier, and I will explain. You'll see it on ASTS right now of how much the premiums are down compared to yesterday. Okay. So when I go to trade, there's a couple ways to do it. If you're not on Robinhood, it's sell to open call is a covered call. Or if you're doing a cash secured put, it's sell to open put. Okay. On Robinhood, it's just sell call for a covered call, sell put for cash secured put. If that is too much for you, go ahead and click on the builder tab and cash secured put or covered call. Go ahead and do that. But if I look at covered calls right now, today, if I wanted to sell this for $100 a share, it is currently, the premiums are down 67% from yesterday's premiums. Why? Because all the momentum has shifted downward now. It's going further away from what I wanted to sell it for. So why would somebody pay me more premium for a price that is less likely to happen, right? So bad example right now because it's a red day, but for example purposes, I want to go ahead and show you right now, in our portfolio, we have 500 shares of ASTS, okay? Right now, if I didn't want to, but I still wanted to make money and I think there's more downside, right? I can go ahead and say, I will sell my shares for 95, okay? And I have 500 shares. So I could do 5 contracts because every contract is 100 shares. And this is expiring by Friday. So someone is willing to pay me $2 a share in premium by this Friday if the stock is not above 95. If it's above 95, I need to sell my shares for 95 and I get to keep the premium I signed up for. So if it's $2, I get $2 plus my 95 if it sells. I really sold it for 97. Okay. Now, if the stock is below 95, and it doesn't matter if it happens before January 9th, it does not matter. You can't do anything as far as selling your shares early. Okay. No, can't do it. You have to let it happen on January 9th. On January 9th, if the stock is above 95, your shares will and should be gone. Okay. If the stock is below 95 on January 9th, you would go ahead and you would keep your shares and keep your $2 a share premium. So I get to keep all my shares by Friday if it's not above 95, and I get to make $1,000. This is how you make your capital work for you while you're sitting there waiting for the stock to go higher. Okay. Now, typically I don't do a weekly. I typically do 30 days or 14 to 45, 45 being the max and 14 being the minimum. For example, I wouldn't want to hold really and do it for February. I like to kind of keep a little shorter leash on it right now. So I do maybe January 23rd. So instead of, and you'll see why, the premium's $2 for this week, but the premium for 16 days out for 95 is $6. So if someone's willing to pay me $6 right now, the second I sign this contract, they will put $3,000 in our account to trade with or pull out to pay your bills. Whatever it may be, you can just go ahead and place these. You have to sell your shares for 95 if on January 23rd. So on January 16th, the stock is 100. It doesn't matter. Okay? It's not going to matter. Why? Because you still have till January 23rd for that stock to come down, and that's all that matters is on that day. Now, if the stock on January 16th was $300, yes, it's going to matter. They're just going to probably go ahead and pull those away early because it's so far away from your strike. Okay? Now, there's a few rules, like I said. So what are the rules? And these are the ones you're going to want to write down. Covered call. Okay? We want, and I'm going to go ahead and make these two screens right now so it makes sense. Covered calls, we want top half of the band, a green day, and for our strike price, okay, 30 delta. Okay, what does that mean? Well, right now, a 30 delta for me is either somewhere at 100, because that's 35 delta, or 105, which is a 28 delta. What is delta? Delta is the likelihood that the stock gets there. Okay, it's not very likely right now because it's a really red day. So we would have done this yesterday, like I said, because our premiums would have been nearly 50% higher. But this means there's a 28% chance on January 23rd that the stock would get to 105. Okay, so the less likely it is to happen, 28%, 22%, 18%, is the less premium you're going to make. Now, could you do these higher ones and get more premium? Yes. Is it more likely that you are going to sell your shares? Yes. Okay. Just know that. If you are doing a covered call, okay, top half of the band, green day, 30 delta, 14 to 45 days out, okay, and you have to want to sell your shares because typically, the same way the market does it, right? The second you sold the stock went up. The second you set a covered call, the stock is going to try to get there. And it's good and bad, right? But if we already know our targets when we had these, right? We already knew our targets were like 115, right? Well, I could set some covered calls at 105. I could set some when the stock goes back up. I can set more at 115, right? You could do more. If your goal is to just collect premium and hold all your shares, you would probably want to wait for a diamond confirmation that momentum has shifted to the downside. The premiums aren't going to be as juicy because it's going to be a down day when the diamond comes into play, but diamonds are telling you there is a little bit more momentum to the downside. You will probably collect that premium and go ahead and keep your shares. Okay. So that's a covered call. You're just saying, I will sell. Like, how many times have you guys talked to your friends, family members, to us in the chat and said, when this stock gets to this price, I'm going to sell it. Okay. If you right now are telling yourself you never said that, just get the heck out of here. But this essentially covered call is put your money where your mouth is. If you say you're going to sell it for 115, okay, then go ahead and set a covered call at the 115. Okay, hold on, making sure I don't have an emergency happening. No. So yeah, that's how a covered call works. I said I'm going to sell my stock for 115. Okay, well, as long as it's above 115 on January 23rd, I'm going to sell the stock, but I'm going to get paid for it while I wait for the stock to get there. Okay. Can you close covered calls and cash secured puts early? Yes, absolutely. We did one yesterday where we did a cash secured put on BBAI, right? In one day, we collected 50% of the premium. And what does that mean? Okay, if I signed up to collect $2 worth of premium, right, and the stock went, for a covered call, the stock went down, they would go ahead the same way this went down, right? This went down, the premium got less. So if I yesterday signed up for it at 50% more, so at $4, today the stock drops. For me to close it, I have to give back the $1.94. Okay, so what does that mean, right? You get your $4, which I'll just do round numbers. You get your $4 a share. So let's just say I got $4, right, on my 5 contracts. If I wanted to close this early, okay, I got $2,000. Well, today it's worth $2. So to close it, I would have to give back $1,000. But in one day, I collected 50% of the whole premium. You can't get more than what you've signed up for. If you signed up for 2, that's the cap. That's the most you're going to make is $2,000. Okay. So if I collect 50% in one day and there's still 15 days left to go, I'm going to go ahead and close that, right? Because I didn't sign up for only making 50%, $1,000 in 15 days. I signed up to make that in 16 days was $2,000. So I would go ahead and close that. My rule is typically in the first week, if I can get 50% of my premium, I go ahead and close that. That's typically my rule. So that's how covered calls works. If you guys have questions, put them in the chat and I'll circle back. Right now I'm going to go to a cash secured put. Okay. So this is a great time. Let me find a better stock that is good for cash secured puts. And it's really easy to filter through and find the companies. Because all you're looking for is companies at the bottom half of the band. So I can there's HIMS right there, right? It's a green day, but I'd be looking for a red day. So let's see if we can find a stock, bottom band, red day. Okay, boom. Fubo. Actually, I hate that stock doesn't have good premiums. PGY. Let's go to PGY. Nope, bad premiums on PGY. Sorry. And the reason I say bad premiums is just it's not a high volume stock. Here is a very tight squeeze. We have ABCL is looking like it wants to break out, guys. I think we should go ahead and probably enter that trade. That is a great looking chart right there. Let me go full screen real quick. Okay, look at this. Big band, super tight. We're getting a squeeze. We got a little breakout. We're waiting on confirmation here. We are in our Fibonacci. Oops, let me pull that back. As you can see, it looks to find support at this Fibonacci level. And it looks like we are fighting for the breakout, okay? So ABCL looks like we're taking off, all right? So good work. I believe Michael in there got some ABCL just the other day. I think he's made some incredible moves right now. A little bit of trimming on SoFi 2 days ago. Good work. Trimmed a little bit of his ASTS, I believe, and then bought some ABCL. So a nice rotation there. So great. That looks really good. So let's look at Zeta's not going to be there. Path is looking good. I'm trying to find one on the bottom band, but I know we've all been moving like crazy. ASST's up good chunk too. Wow. Cypher. Here's Cypher. Red day. It's kind of the bottom half of the band. Okay. So let's go with that one. Cash secured put on Cypher. Alrighty. So, and I forgot to tell you on the covered calls on the band, but the band helps you also figure out the strike. I typically stick to a 30 delta, but here's the bottom of the band. Okay, it works the same way on covered calls. When you go to trade Cypher, sell, put, or go to the builder and do a cash secured put, I'll go to the same date, January 23rd. So let's say here we knew Cypher has a good support line somewhere here in the 15s. the bottom of the band says 1371. Okay, so now we know what those kind of two numbers look like. If you want, you can go off your Fibonacci levels too. If you want to look for your retracement level, right, bottom to the top, there we are, 1550. Okay, so what can I do? I can sign up, and as you can see, that Fibonacci level is sitting right there at a 30 delta. If you wanted to do the band, you could, but your delta is not very high. So what I would do is I wouldn't go off that band at that moment. I would stick to my 30 delta rule, which we do have a trend line of support. So, and again, you don't need this. You can just go ahead and see that it is on the bottom band. We do have a red moment happening. So now we can look at a cash secured put. And sure enough, like I said, the 1550 has a good amount of support. So what does a cash secured put mean, and what do I need? Okay, one, you need cash. Just like you would buy the stock, however many shares you'd buy with the option is how much cash you need. So we're going to stick with the whole number here. If I wanted to do 5 contracts, that is 500 shares. If I was doing it at the $15 strike right here, I would have to do 15 times the 500. I would need $7,500 in cash to be able to put aside on hold to buy these shares if I was to get assigned. Okay. So for example, if I wanted to buy Cypher and I said at 15, somebody is willing to pay me. Okay. So at $15 at 5 contracts, right? And it's not going to seem like a lot, but the money isn't really made on cash secured put premiums. They're really made on the covered call side, but cash secured puts is making sure you get assigned at the right price. Okay. Let me see here. I meant to have this up too, because we'll go ahead and plug this stuff in. Okay. So if we take a look here, what this contract is saying is to somebody else. I am like an insurance agent doing this contract right now. I'm telling somebody, I will buy your shares for $15 on January 23rd if the stock is below 15. Okay. In exchange, if it is not above 15, you are going to just give me my 55 cents a share, and I don't get to buy your shares. You get to hold on to your shares, and I get my collateral back, the $7,500. Okay. So in 16 days, you made your $250. You didn't buy Cypher because it wasn't a no-brainer buy. You would just buy it if it was at 15 and you really wanted to buy it. But because it's not there yet and I'm willing to wait and I don't want to overpay for the stock, I said I'll buy it for 15. If it gets there, cool. I get my 500 shares at 15. I also get to keep the premium. So in your account, what would it look like? It would look like you own the stock for 15 minus 54 cents. You now own the stock for $14.46 in your account at 500 shares, and now you just play the game like normal. When the stock goes back up, now you can set covered calls. Okay, and so here's an example and the math and how this works. Okay, cash secured put, Cypher. Okay, current stock price, it will tell me here 17.11. It's updates fairly quick. Strike price, put option strike price, we want to buy it for $15. The premium per share we would try to get is, well, it's got a range. So I'll just say the 55 cents. Expiration date is January 23rd, and we're doing 5 contracts. Okay. So what does that look like? It looks like I am trying to buy the stock at a 12% discount from the actual price it is today. Okay. I have 16 days. The premium per day I'd be making is about $17 a day till the expiration date. It requires $7,500 in total collateral to do this. The premium you would make is a 3.67% return on your $7,500. If you could do this every 16 days for an entire year, that would be an 82% annual return. Okay. Our goal is a 3% return for every month, giving us an annual return of 36%. So if we can get an annual return of 36% a year, well, we definitely beat the stock market every year by just saying I'll buy a stock and the stock not even getting to the price. Okay. So this is how wealth can be built, or you just bought a stock for the right price now and you're ready to own it and for the upside potential. Okay. If the stock keeps going down, can you do something about it? Absolutely. You can roll. I don't have any open covered calls or cash secured puts to say do it, like to show you guys how it looks. But I do have other videos on rolling. But if you are in a position, there's ways to manage it. But just know you do not set a cash secured put if you do not want to own the stock. Do not do it. Do not do it because the premium is juicy. Do not do it because somebody just told you it's a good stock. Like, you have to want to own this stock, because yes, you can kick the can down the road and roll the option and keep rolling it. But eventually you're just going to end up having to buy that stock. Same thing with covered calls. Do not set a covered call if you do not want to sell your shares, because typically when you don't want to sell your shares and you set a covered call, the stock finds a way to make sure you sell your shares. Okay. You can kick the can. Typically you can I've kicked the can on ASTS. I've done a covered call, rolled it. I probably kicked the can 6 months down the road, was able to get out of it and keep my shares, keep all my premium, right? There's ways to manage it, but don't do it if you're not willing to sell your shares. Don't do it if you're not willing to buy your stock. Okay. Any questions from you guys on the wheel strategy? And what I'm going to show you is, I think I have a little display here, like a little graphic. Yeah, here's our graphic. Okay. So when you're doing the wheel strategy, it's exactly what it sounds like. It's a wheel. Okay. So step one you're going to do is a cash secured put, right? Because your goal is now to buy the stock, right? Step one, you need to own a stock to do anything. So let's go ahead and try to buy the stock. So what you're going to do is you're just going to do your cash secured put. Okay. And then you're going to go ahead and you're waiting to the expiration date, right? We said January 23rd, we're waiting. So if we said we're going to buy Cypher for 15 on January 23rd, it's 17 still, and we don't get assigned the shares, right? Assigned meaning they assigned the shares to us or didn't assign the shares to us. So we don't get assigned the shares on January 23rd. Guess what? We circle back to step number one. We just find another stock to try to buy. Okay. Once you do step one and you get the shares, right? It's Friday, so on Monday the shares will be in your account. You get assigned, you now move on to waiting to do step two, covered calls. You're waiting till the stock now, because you bought at the bottom of the band, right? The stock fell below, it's at the bottom of the band. Now you're waiting for the stock to move up, and you're waiting for it to get to the upper half of the band, green day, set a 30 delta, and now you're doing covered call. So you set your covered call, right? You're waiting for the expiration date. So if you did January 23rd, you wait a little bit. Now you're waiting for February 23rd or whatever. And you're waiting while you're doing your cover call. You wait. If the stock is above your strike, if you said I'll sell Cypher for 20 and now the stock is 22, it gets called away. Now you're back to step one. If you said you'll sell Cypher for 20 and the stock is 19, you still keep your shares, you keep your premium. Well, now guess what? That following Monday, you get to set a covered call again. It's just a two-step wheel with waiting in between. That is all it is. Super easy. I would say the wheel strategy last year probably like paid bills for at least like 6 months of the year, because obviously during the downtimes you're not setting covered calls, you're just waiting out till it gets back to the upside. But there is premiums to be made if you're not super in love with selling your shares at a certain price and you don't want to miss out on making something during the downside. Just go ahead and set higher targets. If you're willing to sell ASTS for 105, or not willing to sell it for 105 and you want to sell it for 130, okay, we'll go out 30 days, put $130 and make some money's better than no money. So while you're sitting there waiting, this is how you can make money in the meantime, okay? Hopefully we get some turnaround here from some of these companies. BBAI just needs to hold that 6. Hold it. But yeah, that's what I got for you guys. We're going to do a little more digging into ABCL. I like the chart here. I'm going to go ahead and remove the Bollinger Bands. I don't use it for my everyday charting. Let me go ahead and remove Bollinger Bands. There we go. And then you can do a weekly time frame. So typically when we lose this moving average, our bull bear line, we go ahead and switch to the weekly and monthly time frame. For example, HIMS is a great example of this, right? We lost this moving average. Okay. Well, on the daily time frame, there were buy alerts. Did we listen to them? No. Why? Because if you switch to the weekly time frame, right? Okay, we are on a key support level. Momentum, if you take a look here, is shifting up, and we have the MACD curling. So we are about to now get a buy alert. But if you bought before, you would have bought this week of November and waited all the way to this time, and now you're getting a buy alert. Now you can, like, soon you'll get the buy alert, and now you can get into the stock. But once we lose this moving average, I switch to the higher time frames to verify when we have switched to a bullish matter. Okay. But it's really hard to get diamonds. Since this was like never lost the moving average. This is why we didn't trade the weekly, because it's not super undervalued where the weekly is going to give you the buy alert. Okay. We need it to be super undervalued. We do the weekly after we've lost the 1 day time frame, or the monthly. You can switch to a monthly time frame if you wanted to. Okay. For example, I think NVO was like perfect for it. Here's NVO, dude. We're going to get a monthly buy alert here. And the last time, I don't even know it happened. I mean, it was, let's go back to 1988. That was the last time NVO gave us a monthly buy alert. Okay. We have a lot of upside here on the monthly time frame. Monthly time frames are long holds. Okay. They're not a day thing where it's like a lot of momentum fluctuating. Now, if you get the buy alert and you want to start trading daily, but I wouldn't start looking at daily until we're back above the moving average. Other than that, I'm just buying on the monthly buy alert. I'm trying to find a measuring tool. Jeez Louise. So we get a buy alert at the top of this wick. I mean, anywhere from like a nice 180% gain. Just depends on how much time it takes, but directly up 170, get over here. I mean, 200%. So it's looking like a good support has been found. This is going to flip bullish. And yeah, so that's an example of the higher time frames when the moving average is lost. Because if you look at the daily on NVO, once you lose that moving average, yeah, it's a great value and time to buy because it's under its 200-day 50 smoothing average here that we have set up as a bull line. Okay, so that is what we do, and that's why the bull line is so important to switch to higher time frames. We do have a 2-hour one coming out that is it works really well, but especially with the auto trend lines and everything, you can see actually here on the daily, you can see the downtrend, and we broke out of it. So these auto trend lines are working great, guys. Auto trend lines with a diamond confirmation when we're near the bottom, close to this breakout point, have been solid setups. That's why on one of them, I don't know how it's doing today. Yeah, all red. We finally went all red. Let's see. What was the LAMR? Was the one yesterday? I'm not sure how it's doing today. How are we doing today? Let me go to the candles. Boom. So we are at the top of this channel. So we have a nice, what looked like on the chart when we got that buy alert yesterday. We have a nice cup happening. We have a handle happening down to the Fibonacci level from this bottom point to the top point, okay? And we have an ascending triangle here. So what we're looking for is a break of this handle. We're going to head here. We're probably going to get some resistance. We'll probably come back down, retest, and then we're going to go ahead and consolidate, or we're just going to go ahead and break through here. So this is a great point. This is what I'm seeing on this chart. It does look like a great chart. I don't know anything about the company. I just saw that we got a buy alert on the indicator as far as the bots in the Discord. So make sure you guys look at those bots at the end of the day. It will happen at close when the alerts come out, and then you can look over them at night and see if it's a company you like and a company that you like the setup on. I don't know anything about the company. I just like the chart with multiple bullish setups inside of one happening. So that's what I got for you guys. Any other questions come into mind, go ahead, reach out, join Discord, invite people to the indicator. Like I said, there are limited spots to the grandfather pricing of the indicator. And I've already had a few questions about a lifetime indicator program. So it's a one-time payment and not a subscription. we're thinking about that. But for now, right now, I have it set up to do either monthly or annually. You'll save on your annual membership, but the grandfather monthly is by far still the best deal. So those are limited spots. All right. I appreciate your guys' support. Any questions come up based on what we went over today, go ahead and reach out in the community, ask questions, make sure you practice, watch back this video, and I'll see you guys.